The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, come on back here to the Diagnostic Trading Hour. Well, we got the NFP report came on out. We got some movement, some nice movement today. Looking on over at the S&P, we see the S&P is currently up 17, a little over 17 points right now. We got the NASDAQ up 54. Russell's currently up 10. We got the Dow up 124 points. And it's been a wild, volatile day. We'll go back, look at some of these charts here in a moment. Looking over at gold. Gold is currently at 5 points right now. We got silver is pretty flat on the day. Copper is up about 0.25%. Oil is up $1.18. Moving up nice there, over a 1% move. We got natural gas moving down at 2.5%. Corn is currently flat, unchanged on the day. We got soybeans up just $1, 4 little ticks there. Euro dollar is currently up 32 pips. Pound dollar is up 68. Aussie's up 4. Euro yen is up 44 pips on the day. The U.S. yen is up 16 pips. The pound yen is up 92 pips. Dollar CAD is currently down 35, and the dollar franc is down 23 pips on the day. All right, well, that gives us our market wrap looking at everything. Let's check out sort of just what's going on and putting some of these pieces together. Let's go and let's look at our news trade plan that we talked about yesterday. And on the plan, we went into a couple things. Went into, NFP. We went into unemployment. We went into various currencies in the whole mix there. And in that mix, let's see what we got. We got employment change came out on the CAD up 29,000. And the unemployment rate dropped down to 7.0. So we got positive numbers right there. For the employment change and the unemployment rate on the CAD. The non-farm payroll came in worse than expected at 113,000 on an expectation of 185. The unemployment rate improved. We could call it improved. It's really dropped off. But so ask anybody and they won't say it's improved. But anyways, the number says it is improved. And you know what? Doesn't really matter. Just got to go with the charts and do what the charts say. So, all that being said, let's go in now and let's check out some of these markets and see what we might be able to do to take advantage of a little bit of this movement. How could you have done it? What did I talk about doing? How did it work out? Okay, because that's what really matters is, put it all together. So, first thing to look at over here is, we're going to look at the dollar CAD, okay? So the dollar CAD for us, and see where that is. And on the dollar CAD, we got a nice little movement. So you can obviously see where the report came out over here at 8:30. So pre-8:30 there, we got a movement down to 9:30 right here, 99 pips. What were we looking for out of this trade? Okay, what was our expectation? Well, on the dollar CAD report, our expectation was a movement of, trying to pull it up here so I can give you the right number, of 80 pips. So we exceeded our movement, our high movement. We actually got all that in the first pretty much 5 minutes, and then it pulled back and went on down a little bit further, and created a nice magnet for us there, like that big spike bar. Did a pullback. Came on right back to that level. Now sort of turning around and going the other way on the CAD. And we can also, if we zoom in a little bit more, we'll look and see. But it came right down and stopped, okay? Moved a deviation and a half. And remember what I said, this USD CAD, when you get these two numbers together, when you get their employment and the U.S. employment at the same time, we usually get some killer moves on the dollar CAD. I had traders posting in and showing me some of their trades that they knocked out this morning on the dollar CAD. Doing very well. And just a simple straddle strangle. And let me see here. I'll find one of the most recent posts that came in. I know I got a dollar CAD one right here. That's somebody who just did the dollar CAD. I can show you that one. And I want to say they did a strangle on it. There we go. Yep, they did a strangle. They used the binaries. They actually tiered it out. Did both the 10 a.m. and 11 a.m.s on the trade. And as you can see right here, they went in, they bought 10, the 11.07s. They bought 10 of the 11.20s for the 11 a.m. Sold 10 of the 10 a.m.s for 10.27 there, and sold the 1.1s there. They're up 1,200 on one side, and they're down about, looking at that, 800 on the other side. So 20, yeah. So and this was right when they first posted the trade. So up about $400 or $500 right now net on the trade. So not too bad. And just trading the simple news. And it went a lot lower than the price they're showing there. So anyways, but definitely want to take profits when those strikes are hit. Looking for that 1-to-1. And that was doing a strangle. Now, I prefer the straddles. I think they work out a lot better. But a lot of traders like those strangles too, using the binaries. So whatever your preference is, the opportunity is there. And, maybe try both and see what works out best for you. Looking on over, let's look at the NFP report. That was the dollar CAD one. Let's look at some of the other currency pairs, what our expectations were, and what kind of movement we got. And so let's pull up. We'll just start at the top of the list. We'll go over here to euro dollar. And on euro dollar, here, let's just bring this to the 10-minute bars, make it easy. So on the euro dollar pre-report right here, we got up to 68 pips. Okay, that was our high. And then let's go down here to our low, because pretty much we got the high of the low in one bar so far on the day. And we got 71. So a little bit stunted there on the euro dollar. But, still profitable. And saw trades on the euro dollar. They're profitable this morning. Looks like it's trying to move back up. It basically made about a 50% retracement. It's been oscillating ever since that point. But we surpassed our, deviation high to low, instantly. We actually had that pretty early on. But that gives us our euro dollar. And we were up here, again, anytime you get to that deviation high to low, you should be looking to take some profits off. So if you had your take profits in, you probably already exited the trade, just depending upon how you set those up. We can go over and look at euro yen. Usually a bit more volatile. Let's see if today was the case. And let's figure out what we got on our high to low on this one. Our high to low, and always be measuring that high to low. Okay, don't just measure from open. We got 119 pips. We had an expectation of about 100 as well. So not bad there. Nailed it. Dollar franc. Where are we at on the dollar franc right now? So on the dollar franc, looking on at that, and let's see what we got so far. This one has not been hitting his 100 pips as much lately, I've been noticing. But let's see what we got today. Today we got 64 so far on the day. So a little bit lower. It has, like I said, that has that historical where it's really been knocking it out, but not quite as much. I've noticed the last couple of reports have been like in the 60 to 80 pip range. Still hasn't completely affected the averages over the couple years, but it's been a little bit lower. Checking out the pound dollar. So over here on the pound dollar, what do we got? High to low by 11 o'clock. There we go. Got 78 pips on the pound dollar. And let's check out the pound yen. Now we're looking for pound dollar, pound yen. We're looking for around 100 pips, at least between the two. So we got 80 on that one. Let's see what we got on the pound yen. And we go high to low, low to high. And we got 192 pips. So you definitely averaged out at that point. As far as what you get from pre-release, to high, you got 109, pre-release to low. We got 87. This is actually a trade right here. It moved far enough that very possibly, okay, as long as you were just going for 1-to-1, very possibly you could have taken profit on both sides of the trade at a 1-to-1 and actually ended up netting out. Let's say you're risking 50, okay? So let's say you made 70, or let's say you're risking 40. So you made, we'll say 60 on one side, and then you also made 60 on the other side. So you ended up netting out like 120 on a $40 risk, giving you a net like 300% return by using the spreads. So pretty impressive, to say the least. So not too bad for a couple hours or an hour work there. Let's check out the Aussie. So at a little lower range, okay? Still a high profit probability of breaking 50 pips. Let's see if it kept within its normal stats that I'm calling out each and every day for you, trying to help you be ready for the markets. And let's see, our high to low, we got 74. So we matched our 60 pip expectation. And then we can look at pre-release. May not have got that 60, got 54. So not too bad from pre-release to high. But we got our 74 pip high to low. And again, notice how we're like right off of deviation levels on each side. So be taking those profits. If your profit's anywhere, especially if it's like right above or right below, you definitely want to be maybe putting it right. Maybe give up a few ticks. Maybe it's not a 1-to-1. Give up a few and take it, because it'll hit those deviations and just bounce right off of them. And again, I post those every day at 8:15 inside the scanner there. You get access to that over on TFNN. But definitely take advantage of that. Okay, so that wraps us up on those. The one other one we had was the U.S. yen. Now, the U.S. yen has an 80 pip average range, but it only breaks 50 pips about 67% of the time, which still isn't horrible, but it's not as high as the other one, so it's usually not the preferred one I'm going after. Nevertheless, we got 114 pips high to low out of it. I'm going from pre-release to low. We're looking at about 78 pips. And so right at that 80 pip mark there. And then going from pre-release to high. Didn't get near as much on that side, but got about 38. So you could have also, one thing I know some traders will do is they'll go in, they'll hit their take profit. Like if you would have done US yen this morning, you hit your take profit. And then they'll actually set their other side to break even, just in case it does what we're looking at right here. Okay, just in case it flips around. Because let's say if you risk 40 and you made 60 on one side, so you netted $40 because you are looking at losing $20 on the long side, but then it flies back up, you get that 20 back, you net 60 out on that 40, you make 150% return on the trade just by going for break even on the other side after your first side takes profit. Some people might want to go for more, but you can see as it did on many markets today. It flew up, it went down, it came back up, or it flew down, it went up, it came back down, but went right back to that level and then sort of leveled off. What about the indices? I didn't even do the indices this morning, but I saw some traders who did, and they knocked it out. And we'll go in, we'll look at some of those. I did a couple long indice trades, but I went long on the indices versus strangling or straddling them. All right, we'll stay there. We'll be right back. We'll talk about some of those trades just right after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right. Let's check out where we're at on the indices right here on the Diagnostic Trading Hour. We got the S&P. So let's look at the S&P. Let's see where we're at right now. Had some nice moves. Had a big volume spike right up here. Look at this big old bar that's exploding and becoming a nice magnet bar for us. That became a nice buy for me, okay? Saw the thing fly down. And big volume. I'm like, you know what? This is a nice Nadex spread opportunity because I can go in with limited risk and I can grab, trade. Went in, bought some spreads. I bought some last night and I bought some more this morning. I expected the market to rise based on the report. If I was wrong, it wasn't going to hurt that bad. I'd capped risk. But anyway, so popped up, came back down. I'm like, it's popping back. And it does. It goes right back up. And we what are we, like 2 ticks away? What's the high right now? 1786. Let's go over here. Let's look at 1785.5, 1785.75. We're a tick away. Tick away from that same high. And by the way, we're at the deviation level as well. We're at the 1 deviation level. I said that I publish there for you every day. And you gotta love those deviations. So it's market expectations. That's all it is. There's nothing that fancy about it. I mean, it's there's a lot of math in there, but Not so much that it's too hard to handle, but it's just using implied volatility, market expectations. This is the market saying, we expect the market to go here. Bam, hits it, does it, comes back to it. Gotta love that. I mean, it just doesn't get much cleaner. Anyway, so looking at all this, I'm trying to see what else we could tie in. We'll just go into that's enough. There's a couple ways to trade this, by the way. You can buy the spreads. You could also look at even buying an out-of-the-money binary at a pretty good distance. So, maybe we could check that out. I'll show you a way that I analyze these sometimes. A high, 1786 right there. So let me go over to my Nadex. Yeah, let's bring up my demo. Got that one handy at the moment. And dive into that. So if I go over here to my Nadex binary contracts, let's say we're looking at the indices, the S&P. Say we're looking at end of day, okay? And we're targeting, I want to say it was 1786, right? Yeah, so 1786, what we're going for. So then what I do on that is find the 1786 binary. There we go, perfect. And then just look at, let's pull up the quick chart. You click on this little arrow, you can look at the quick chart. This is really good for starting to learn how these things move. It's a very helpful little tool. And give it a second. Sometimes you have to open it a couple times. I have no idea why, but sometimes you do. And so let's get that out of the way. Let's pin this on top. Now let's line some stuff up. All right, so let's say it pops down, your deviation down. You're expecting a retracement back to the level. Closes right here. You're like, okay, I'm ready to go long on this thing. And so you decide to go ahead and buy. And you do it at, we'll just say, right here at the close of this bar is, on this one, is at basically at 1840. Or 840. So if we go in here, and right here, so it's down here, you're buying the thing for 35.40. Okay. So you're buying it for, let me make sure you can also go right here. This is a good little tip. This little icon right here, you can change this to say ask. Okay? So I can go over here, I can look at it, and I go, okay, well, what was that at? Okay, the ask on it at that time was somewhere between $6 and $10, or $6 and $9.50. So we'll just go with the highest number. Okay, so we'll say we bought at, because it closed up, so it makes sense. We'll just go somewhere close to the close there. The close was $8.50, but just say you bought at the high. You bought at $9.50, and then it goes up, and as it's moving up, and I talk about this a lot on the show. My biggest edge in trading binaries is that I know that if the market hits the price, the binary contract will be worth 50 at the mid. Okay, the mid price of the binary will be 50 because a binary is by nature a delta. Okay, that's what you're trading. You're trading delta. If you're an option trader, you know what delta is, and it's just you're trading the change in delta, and it moves very fast when you have days or an hour or a day till expiration because you got your gamma effect going on. Anyways, but if you look at any option contract on the planet that's a call or put or whatever, you're going to see that when it's at the money, the delta is 50. So I know when a binary becomes at the money, when the market gets there, it'll be worth 50. And so that's how I am able to take an edge of that because I can set a take profit there. I'll go into that and explain it a little bit clearer right after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, going back here to the Diagnostic Trading Hour. Let's go ahead and check out what's going on and see how we can take advantage of a few different things in the market. One of those is, just looking at volume. And so on the volume, I'll go in, like I said, I'll target the binary. And I talked about, go in here, you get a buy signal, let's say 10, 20 bucks, 25 bucks even. You could look at potentially buying a binary contract to target that level. And here's the big key is don't hold the thing until expiration. I hop out before expiration. And so I'll go up here, and since I'm targeting this level, I'll exit out at basically at 50 mid, which means that I'm looking at about a 47 by 53, and I personally like to give a little room. So I'll be looking at more like a $43 exit. So if I buy it, say 10 or 20, I'll exit at 43. If I buy it, sell it, say 90 or 80, I'll buy back at 57. And that's because I know, one, when it hits that price, the mid price of the binary is going to be worth 50. I know there's some bid-ask spreads, so that's where like 47 by 53 comes from. And then, what if it misses by just a few ticks? I don't want to lose on the trade, and so I want to give myself a little bit of room just in case it doesn't get there. And I'd rather give a couple dollars profit than get back all and let a profitable trade turn into a losing trade. So, anyway, so hop in, hop out. Very simple trading method. But looks like the market is, let's see, how high are we now? Yeah, not quite there yet. We still got like a tick left. So on it. We'll see if it goes up and breaks that high, but it looks like it wants to. A lot of people, now this is also a common, I would say, a very common, I think, error to make is because it's moved up, I should now fade it. Okay? Because it's at a deviation level, I should now fade it. And I do not agree with that idea. Simply because it's at a deviation level, simply because it's moved up, does not mean that you should go in and fade the trade. You need something to tell you that it's going to go the other direction. If you just fade it, you can be wrong a lot. Okay, one of the number one reasons traders lose is because they have an opinion that they trade, and they think, hey, it's gonna go the other direction, and they fade. They basically fade the trend. Instead of trading the trend, they fade the trend because they want to be really smart. They want to catch that move quick, and they want to minimize their risk, supposedly, and they want to, maximize their profit, and they want to be really smart. So don't do that. Okay, get some confirmation. All right, so what do we have? Do we have some potential confirmation? Well, I don't know. We're up here. We're at a deviation level. I'll get rid of that pink line because it's basically the same price level that we're looking for. It's up at a deviation level. Awesome. It had a volume spike, which is, honestly, that's what I look for, is a volume spike. So, yeah, that is a confirmation. But I need one more thing. I need it to break the low of this next bar. If it doesn't break the low, and I'll look at 5, I'll look at 10. So here's the 5-minute one, okay? I need to really break the low before I'm looking to hop in. And we're basically at the same low, looks like, across the board. 1784.75, 0.75, 0.75. We literally had the exact same low on the 5-minute charts. 1, 2, 3, 4. The exact same one, okay, for 20 minutes. And I'll give it usually 3, a maximum of 4. This would be like the last possible chance I would give it to go in and do a reversal trade. And at this point, by the way, I would not be doing out of the money. I'd be looking more at a premium collection type move to take advantage of this. So deviation level plus, and that could be deviation level high to low. It could also be deviation, like a one deviation move. It has to be at least a deviation. A deviation high to low, a deviation low to high, a deviation retracement, well, one deviation move, but all those are like 1 or greater. With the volume spike, with price action going the other direction. Not just, it's been moving up all day, it can't keep going. Because if you traded for any amount of time, you've done that, and yeah, it's painful, right? Because it amazingly can keep going, especially those times that you think it can't. So it never does until, it does. So anyway, just some tips, but that's how I trade them. I would have hit the deviations, I look for a volume spike, and then I look for it to break the bar after that volume spike occurred. Okay? So there's 5 minutes, 10 minutes, same thing. Neither one is broken. You can really see clearly the flat line happening right here. And that doesn't mean we're not going to pull back. It's just I don't see anything telling me to go short. So I don't necessarily see a big reason for going long. I would have my stops tightened up. Okay? So I'm not all long. I'm not all short. I mean, maybe if I'm anything, I'm butterflying until I see otherwise. But there's not a lot for me to do right here. Okay? So the trade was not necessarily, the trade that we had was the buy after that volume spike and target the magnet price. Okay? That was our trade. Now, until we get something that, now we got a volume spike, but until that volume spike actually gives us a sell signal, which it didn't. So we had no sell, no short, and you can really save yourself. I mean, I saw a couple traders this morning, they were asking me, they're like, hey, do you think it's going to turn around and go down? I'm like, yeah, but I'm not going to trade that. So my opinion can often be wrong, and so I'm much better just going trade what I see, not what I think. And what I see is price is moving up. What I think is, man, this thing could just monster tear down. And but it's moving up, plain and simple. Let's go ahead. Let's check out the Nasdaq. Let's see how it's rocking along. And it's just had some tremendous strength. Look at that. It came back up. It just nailed that magnet price right there. Look at that. Just bam. So hit right on it, came back up, hit it. This one had a volume spike. Okay, here's at a deviation, high to low. And so we got a nice little, boom, volume spike, breaks the low. And so you have a short-term, premium collection trade. And there's your 10, there's your 11. And since your high was here, this is where your thing would have been. So that would have been a nice volume spike reversal trade right there. That would have been a good reason to go short. Not simply because it's at a deviation level. And a lot of people would have missed that, though, because it was at 0.7. They didn't take into account the 0.3 drop and the 0.7 rise, which is a 1 deviation total. Anyway, so wait there, and then we got it long. And thing just keeps rising, and rising. It's beautiful. So don't fade it. Just go with it. Let's check out the Dow. So we got going over here on the Dow this morning. So it busted through its level. See this right here? Did not have a volume spike at that deviation. Just now got one. Okay, here in the last 25 minutes or so. And did not ever trigger a trade to go short. And it's busting up as well. And let's go ahead. We'll bring the Russell up. Check it out. So on the Russell, we got a nice, same thing, big move. And then big spike, volume bar there. Goes down, flies up, hits it, gives a volume spike, gives a reversal trade. So we got a reversal trade also on the Russell to go short here. So if you did 10 or 11, you'd have been profitable because your strike would have been up there above the high. And then it just pulls back. It's oscillating around. And now Russell's sort of quiet. Russell isn't showing the strength that we're seeing like in the other indices at the moment. Let's check out the DAX. And let's see, DAX, we got the big move down. We got the spike up. And we did not get the volume spike reversal on it there. But still basically the same thing, and it's showing the strength and resilience as well. One of the best things you can do as a trader, by the way, let's say you're an S&P trader or a Russell trader or a NASDAQ trader, Dow trader, whatever, is have up, the FTSE and the DAX and the Dow and the NASDAQ and the S&P and the Russell. Even if you're just trading the S&P, have those up. They, more often than not always, but a lot more often, like a very high percentage of the time, they are correlated in their directional movement. And it will help you from making bad decisions by giving you cross-market correlation, basically giving you confirmation of the trend and what's happening. With that, you can look at multiple time frames, such as I was in an S&P trade this morning. Okay, had a nice, decent little position going on, and I wanted to get out of this trade really bad. Okay, it was up. And I was thinking about getting out, started pulling back on me. I'm looking at my 1, my 2, my 3, my 4-minute bars. They're starting to pull back on me. But as far as my trend confirmation, I had not got a short yet. And my trend said go long. And so I'm like, I'm going to stay with the trend. And, I saw some of my profit just drifting away. And I'm like, gonna stay strong. Like, if this thing goes back down to 0, I'm just going to get out, but it's going to piss me off. But I stay with it, stay disciplined, and moves on back up, nice and high, and ended up taking a nice little profit right when it moved on up here to basically to the high, to that deviation point. And now I'm regretting that, right? It's still going. But, I'll trail my stops. I didn't go short there, okay? But I trailed my stop up and take some profit off and lock that in. And, it looks like, may even make more as the day goes on. This thing just keeps rising up. But it was a nice return. And but it was hard. It was difficult to be disciplined and to follow the trend when I was like, oh, this thing's going to turn around. Because, this was actually happening on the air. I had this trade on. I had this position going. And while we're on the air this morning. And it was between 9 and 10, so when the bull bear binary hour is. So we're going in, and I see it coming down. I start seeing it pull back up a little bit, okay? And so I'm like, all right, this thing's going to pop back up. I'm going to get because I bought it last night, like down here. I'm like, I got that one going. This one right here, it pulls down, starts pulling back up. I'm like, okay, this thing's going to go. And so I have a nice little profit. Then all of a sudden it starts fading away from me. This is after the show, and I'm like, oh, come on. And I'm like, trend still says long, trend still says long. And I moved my stop to my break-even point. And really just hoping I'm not going to get knocked out. I just don't want to, the hardest thing as a trader is, one, not letting your profits run away, not letting your losses run. And then the second hardest thing as a trader, which sometimes is oddly enough, especially as you start becoming more and more profitable as a trader, it can actually be harder than taking stops, is letting profits run, because you so badly want to lock in that profit. You don't want to let that winning trade become a losing trade, and so you just take it off the table way too quick. And I think it takes it takes a tremendous amount of discipline to have good risk management, but it also takes a tremendous amount of discipline to have good profit management and not take your profits too soon, and not take them too late. And I'm not talking about being greedy because you're going for everything, but I need to have a reason to take profit, not just I'm profitable. And my reason had nothing to do with my P&L. It had to do with, okay, hit the deviation, I got a volume spike, there easily could be a bounce back, and I can either do one of two things. I can close this thing out, or I can tighten my stop. So either, I was done with the trade, I was very happy with my profit, and I had a reason on the chart to go, this could easily turn around. I'm not going to trade it as if it turn around, but I'm at least going to tighten up my stop or get out. And I don't know, just using some of those little things in your own trading can make a world of difference. Let's check out some commodities here. We're going to gold. And gold went crazy. Gold has not been able to make it back to either magnet price side here. So we got some big volume spikes, 5, 10s, 15s, all flying off the handle. So we got a big range up here. And then if we go down here, we got a big range down here that we're looking at. And it's literally just been pretty much range bound. Gold's close for the day right now. Basically made about with that big spike up, we had a pull back down, almost 100% retracement. It got pretty close. That's like where that whole, if you were targeting that level, when it popped up right here, when the market ran up on this bar, and then you decided to do the same trade like that I was showing you earlier on the S&P, and you decide to fade it and you're targeting this price right here, this is where that whole buying at 57 rule would have came in, because it would have got you out. Okay? If you were going in and trying to buy at 50 or at 53, you would not have got out of the trade, and you would have ended up losing on the trade or giving back a large percentage of your profit. So that's a good example of that whole 57 rule working in your favor. Let's go in and we'll look at silver, and then we'll check out oil and natural gas. And let's see. So we got right here, we got silver, basically almost an identical chart to gold. Very often that's the case. Massive move, and lots of trading possibilities there. Usually not the thing I am the most focused on. I'm more of a gold trader than a silver trader. All right, stay there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Well, I don't know about you, but you don't get much prettier of a trend than that right there on oil this morning. Moving on up into this sweet, nice consistency. So that's a nice chart. Man, that pisses me off. I wouldn't trade oil today. I guess I traded everything else. But man, that's just oil is so choppy, and look at how clean that is. So that's fantastic. All right, let's do a little news review for next week. I want to make sure that if there's anything, I know next week was a pretty light week. So from my last view there, but I just want to make sure that we don't have anything coming up. I'll catch you up on any of the details that are needed, but I just want to make sure you're good through the weekend. Yeah, we don't have anything coming up Saturday, Sunday, or at least Monday morning. Really not even Monday evening that you need to worry about. The only thing I probably would put on your calendar is that Japan does have a bank holiday on Monday. So, of course, it will lower the liquidity, and it will cause sort of erratic volatility usually whenever that happens. And the holiday is, and I don't know anything about it, but you can Google it, National Foundation Day. So they have a bank holiday then, so just be aware of that on the yen for you yen traders out there. But it's probably my favorite currency as far as trading against anything else, just because of combining it with pretty much anything makes it more volatile. Let's see here. What else? That's pretty much it on that. So, okay, well, there's oil. Let's go. Let's check out natural gas. So it had some pretty big moves. And if I'm even on the right, yeah, I need to roll that one on over there, don't I? Let's see, where are we at right now? Obviously, I don't trade natural gas a whole lot myself, but yeah, we're on the March active contract. So NG 03-14 or H4, depending upon what platform you're using. Anyway, so there we go. Yeah, look at that. Even natural gas had a nice uptrend and a nice downtrend today. So, and obviously, I guess it had a nice downtrend too. Look at that. So just shooting on down. European session shoots on up. The morning U.S. session there, and then lunchtime sell it on back down. So you don't get cleaner trends than that, especially on natural gas. So that's beautiful. You can trade natural gas, by the way, over on Nadex, on the Nadex spreads, the Nadex binaries. If you don't have an account, if you're wondering what all this is about, this whole capped risk, effective massive leverage, not having to worry about getting stopped out on trades, trading news trades, doing premium collection trades, all these different things I talk about, hop on over here to TFNN and click on your Nadex, the Nadex banner right there on the top right side of the page. When you click on that, click on trading and demo trading account and get your account set up. Fund a live account, just click on create account, and it takes about 5 minutes and $100 to fund a live account. The benefit of funding a live account is once you funded a live account and you've made a trade, doesn't matter whether you've made a $50,000 trade or a $3 trade, you can call up Nadex at their customer service number below here, and they will extend your demo account for 1 year if you made one live trade. Like I said, it doesn't matter if it's a $3 trade or a $50,000 trade. One trade qualifies you for a 1 year demo versus 2 weeks. And then if you want to learn more about how to trade Nadex, of course, check out the diagnostic scanners and all the tools we give you access to over here, including the deviation levels. All right, well, y'all have a great weekend. Good luck in the markets, and I will see you Monday.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
You're watching Tiger TV.